Hey everyone, welcome back to Grumpy Monkey Technical Trading. My name is Michael, and this is another BananaRama episode where we take a look at Mad Money's Lightning Round, Cramer's show. We take a look at each of those stocks and see how it compares with what Cramer said versus what the stock charts say. So stay tuned, it's going to be a fun episode. All right, let's start things off with Disney. DIS. Cramer says that it could fall to 94.95, but in the long term, you won't notice because it's going to be a solid performer. I would tend to agree with that. I think it has a chance to go down to 94.95. I wouldn't put it as certainly a certainty, but that would put us against this lower support line, which is kind of the critical support line. I definitely wouldn't want to go below it, but I think the fundamentals of Disney are so sound that we wouldn't really have to worry about it. So if it did go down there, that would be a tremendous buying opportunity. I mean, if you look at just the Star Wars property alone, and heck, just even the toys alone. Force Friday came out last Friday. I had friends going nuts, not just for their kids and what they could give their kids, but what they could get for themselves because they were so passionate about Star Wars. I think it has that level of appeal. So if it does fall down to that level, I'll certainly be looking at it. All right, Noble Drilling, NE. Cramer says it's been crushed, destroyed. He's not recommending getting into it, but he's not selling it either. And I could see that. I mean, it's obviously had a really prolonged downtrend. It's not the right industry to be in right now. I mean, everything with oil and gas is depressed, particularly the industrials, so they won't pick up until something changes fundamentally in the market. So you have right now this nice descending triangle, which looks like it's converging, sometime next year. So if you're patient, you want to hang on to it, because you already own it, that's fine. But there's really no reason to buy it until it breaks through this resistance line here. Then you could expect at least a run up to that resistance line. Malen Cra, MNK, currently experiencing a massive downtrend. Cramer says they paid way too much money in acquisitions. People are worried. Wait till it bottoms out. So where will it bottom out? We have a nice support line running from past years up to here. We also have our Fibonacci lines, which are marking out the current position, as well as enforcing this other support line that's defined. We can also see just in the actual oscillators that we're hitting an oversold mark. So we're below in RSI, oversold in stochastics with the nice little hook that I like, as well as recovering in the CCI. That tends to indicate that a turnaround is soon. So I would expect that it would probably tap on this line again, and then maybe we'll recover a little, but this could be the long-term support line. Lululemon, Lulu. Cramer says that they're doing well. They're a good franchise. It's a bull market for apparel. Looking at the chart, it's pretty easy to say that once they bust through this resistance line with some volume, stock is good to go. Emerson Electric, EMR. Cramer says that can have you sell with a 4% yield, just one of a number of large industrials doing badly. In a couple years it could be better, so just be patient. I don't see a compelling reason to buy the stock necessarily beyond the 4% yield. I actually had to go back 6 years of data to draw a decent Fibonacci sequence. You can see it touched the 50% line here, which is nice. I expect it's probably going to go back and retouch it, but we are hitting some oversold values. We are oversold in the RSI. We have a recovering CCI, and the MFI is also in the toilet. But I don't really see a compelling reason to buy, particularly after this massive decrease. You would want it to kind of break one of those trend lines there. But if you're in it and you're patient, yeah, hold on to it. Flowtech, FTK. Cramer says that it bottomed a long time ago, and it totally did in June, July, and has been on a massive uptrend ever since, hitting towards these resistance lines up here. And I think it's due for a breather. So if you bought in June, July, and you're looking for an opportunity to take some of your profits, now might be a good time. It might have another week in it, but I don't think it has much more before it takes a little bit of a breather and kind of hangs out in the 20 region for a little while. Apple Hospitality, APLE. Cramer says that he thinks they're good, thinks the yield is too high, the group has been crushed, but thinks there's overall an opportunity. There isn't a lot of data here for me to look at. You could argue there's a symmetrical triangle here where we're bouncing in between trend lines, and we'll resolve that somewhere over here. That typically for symmetrical resolves in the direction of the original trend, which was positive, but that's not a guarantee. Omaros, O-M-E-R. Cramer says they have a good spec, but there's better quality out there for the money. Looking at the trend, there's not a lot going on, really a big downtrend and some really wild patterns recently. Actually, the only thing I'm interested in is this stochastic descending triangle. Presumably, it's going to pop out of here sometime soon, which could indicate at least a brief reversal of this massive downtrend. So something to keep in mind if you're trying to get out of it. Hallebertton, HAL. Cramer says that it's getting interesting and he's looking to leg in around 35, which would be around this support level, which I could buy. I think that's a decent support level to take a look at. But with any sort of negative news, something about the interest rates or something negative about oil, I definitely think it could hit this 32.5 mark again. That would be, I think, a more major support line to hit. And then it's not really going to do anything fantastic until it gets back out over here. We are essentially making a head and shoulders pattern where we have this large head and a couple of shoulders. So that's a really negative pattern. So it's still got at least a little ways to go before it turns around. Wendy's, WEN. Cramer says there's worried about cost of labor, but there could be an opportunity. Just don't get too aggressive. Man, I really want Wendy's to be successful. I love their burgers. I like what they're doing with their restaurants and trying to turn it around by creating more high quality products, but I am a big Wendy's lover, at least my stomach is. But overall, from a stock perspective, they're in a downtrend. There's not a lot going on that indicates that that's going to reverse anytime soon. We have the Fibonacci support line, but probably some deeper support lines down in the 8 region. So I'd maybe look for it there. Tesla, TSLA. Cramer says that Elon Musk is a great stock manager and car maker. If you like the car and want to own the stock, he does not have a problem with it. Tesla for me is a bit of a bummer, if only because I was looking at it right here to short it, and I just didn't get around to it, and then it just completely cratered, and this would have been an amazing profit-taking opportunity. If you look quickly, you can see it's an ascending triangle. We're going to bounce between these lines until we get either some sort of breakout or news or something driven by volume that powers us likely above, but you never know. Lynn Energy, Line. Cramer says, hold it, hope for a bounce, but they've screwed up and taken on too much debt. They've gone about things in the wrong way. You can see this huge descending triangle, which is already pierced on the downside, and we're testing that resistance line up from the top now. If it doesn't break through, it's going to be down again. So this may be your opportunity to get out. If it can pierce it and maybe eventually get through this line, then you may have a little bit of a run, but nothing good here. United Technologies, UTX. Cramer says, downgraded to the 80s. All right, enough already. Hold it until they straighten out their issues. And yeah, it's not a great pattern. Putting on the Fibonacci lines, we're hitting the 61.8% mark. I expect maybe a little bit more downside, but we're kind of at the oversold mark. We have a really deep RSI. Stochastics are recovering, but bending potentially back in, which is never good. CCI is recovering, and the money flow index is way oversold. So I could see maybe it coming back down and tapping on that line, and then going in for a bit of a recovery, but not super optimistic about this stock. All right, that's it. Thanks for watching. If you enjoyed the show, please subscribe to the channel. The subscriptions really help grow the show, so I would like to get more subscribers. Thanks again for watching, and I'll see you again soon. Bye.